We're diving deep into Apple Inc., ticker AAPL.
Yeah, Apple. I mean, it's a company so many of us use every single day, right? And it's at this really captivating crossroads. Our sources show, on one hand, you've got this impressive growth, real strength, but on the other, there are significant challenges, strategic shifts happening. It's definitely more than just about the latest iPhone these days. It's the whole ecosystem, its future.
Exactly. We'll start with the immediate financials valuation.
hmm
Then we'll zoom into that standout Q3 2025 performance. After that, yeah, we'll look at Apple's competitive advantage, its moat, and where the big future bets are going, especially, like you said, AI. And finally, we absolutely have to unpack the risks, the headwinds Apple's facing. It's all here, pulled straight from your sources.
All right, let's jump straight into the numbers then. What's the immediate financial pulse of Apple right now, based on these sources? For anyone looking at the stock, what's the price, and how does it, stack up against what analysts think?
Sorry. So the sources show Apple's last close price at $202.38 US dollars. That was actually down a bit on the day. $5.19, or about 2.5%. Now, comparing that to analyst views, the report gives a fair value estimate of $205.59, and their price target is $214.03. So at the time of the report, it was trading just a tad below that fair value with maybe some upside to the target. But what really jumps out, and honestly, it's almost hard to fully comprehend, is the sheer scale. We're talking market cap of $3.02 trillion. Trillion. And an enterprise value right around $3 trillion, too.
Wow. $3 trillion.
Yeah, it puts it in perspective when you think that's bigger than the GDP of, well, many countries. It just underscores their immense financial weight.
That's staggering. And okay, beyond the raw price, how's the market valuing Apple relative to its earnings, its sales? What are those key ratios telling us?
All right, the valuation ratio. So the trailing 12-month price to earnings, or PE ratio, is 30.38. The forward PE is a bit lower at 27.74. Now, for you listening, that PE ratio basically shows how much investors are willing to pay for each dollar of Apple's earnings. A number like 30, well, it suggests the market is pricing in pretty significant future growth. We also see a price to sales, or PS ratio, TTM, of 7.4, and maybe more importantly for some, the price to free cash flow, PFCF, is 28.61. That one's a pretty good indicator of how well Apple turns sales into actual cash it can use.
Got it. And for listeners interested more in, say, income streams, does Apple pay a dividend? What's that situation look like?
They do pay a dividend, yeah, but it's fairly modest. The annual payout is $1 or $1 per share. That translates to a dividend yield of just 0.5%, 0.50%. And the payout ratio is low, 15.47%. That tells you Apple holds on to most of its earnings, likely for reinvesting back into the business rather than paying it all out to shareholders. Just for tracking purposes, the last payout was May 12th, 2025. The next one's scheduled for August 11th, 2025. And the next earnings release date is flagged as October 30th, 2025.
Okay, moving on from valuation and dividends, how healthy are the actual operations? Profitability, efficiency, what do the margins and those return metrics show?
Operationally, the numbers are, well, exceptionally strong. Trailing 12 months revenue is sitting at $408.62 billion. And that generated a net income of $99.28 billion. Now look at the margins. Gross margin is 46.68%, operating margin 31.87%, and net profit margin is 24.30%. For a company this massive, maintaining margins like that, it really speaks volume.
Yeah, that's pretty impressive efficiency at that scale. It points to serious pricing power, right?
Yeah.
Brand strength.
Absolutely. Pricing power, brand loyalty, and very efficient manufacturing and supply chain management. It's all in there. And maybe even more impressive is the free cash flow margin, FCF margin, at 25.86%. That means basically a quarter of every dollar in revenue turns into cash the company can actually deploy.
Deploy for things like dividends, buybacks, or those big AI investments we mentioned.
Exactly. Dividends, huge share repurchases, and yes, funding those massive strategic bets like AI. And look at the efficiency metrics. Return on assets, ROA, is 29.95%. Return on equity, ROE, is an incredible 154.92%.
Whoa, okay, 154% ROE. How does that even happen?
Well, it's partly the high profitability, but it's also significantly amplified by their aggressive share buyback programs. Buybacks reduce the equity denominator, which pushes that ROE figure way up. It paints a picture of, exceptional capital deployment. And return on invested capital, ROIC, is also very strong at 49.83%. We're looking at about 14.95 billion diluted shares outstanding currently.
So while those overall financials paint this really robust picture, you're probably wondering, listener, what's happened most recently, right? Let's zero in on Apple's fiscal Q3 2025 earnings. That quarter ended June 28th, 2025. What were the key takeaways there? the growth drivers.
Right. Q3, the sources show it was actually a very strong quarter. Apple reported record revenue for a June quarter, $94.0 billion. That's up a solid 10% year over year. And diluted earnings per share, EPS, hit $1.57. That's up 12% year over year. What's particularly interesting is that this growth accelerated globally. Records in over 24 countries, apparently, including a noticeable acceleration in Greater China, which is always a key market to watch.
Okay, 10% revenue growth is strong. Let's break that down, though. Which parts of the business really drove that? Was it iPhone again?
Services. Yeah, the iPhone definitely led the charge. iPhone revenue was up 13% to $44.6 billion. That was driven, the sources say, by the popularity of the new iPhone 16 family. Mac revenue also had a really good quarter, up 15% to $8.0 billion. They attributed that to the strength of the M4 MacBook Air. And services, well, services just kept rolling. All-time record revenue there, $27.4 billion. That's up 13% year over year. And it wasn't just one thing. It was broad-based strength. Cloud services did well. App Store, too.
Okay, iPhone strong, Mac strong, services hitting records. Were there any segments that didn't quite keep up that pace in Q3?
Yes, a couple lagged. The sources note iPad revenue was actually down 8% year over year, and the wearables, home, and accessories category that includes things like Apple Watch and AirPods, that was down 9%.
Any reason given for those dips?
Apple apparently attributed those declines mainly to what they called difficult comparisons, meaning they had really strong product launches in those categories in the same quarter last year, making it hard to match that growth this time around. So maybe more about the timing than a fundamental demand slump, at least according to them.
Okay, makes sense. So strong Q3 results overall, but with some context on the declines. Now, looking forward, what guidance did Apple give for the next quarter, the September quarter of 2025? You mentioned earlier this might be where some of those crossroads elements appear.
You're right. This is where things moderate a bit. For the September quarter, Apple guided towards total company revenue growth in the mid to high single digits year over year.
Mid to high single digits. So still growth, but definitely a slowdown from Q3's 10%.
Exactly, a deceleration. They pointed to two main reasons for this expected slowdown. First, an estimated 1 percentage point impact from some pull-ahead demand into Q3, possibly related to tariffs. And second, those challenging comparisons, again, this time from prior year iPad launches impacting the September quarter comparison. So yeah, still growing, but the pace is expected to cool off a little bit heading into Q4.
Okay, so we've got the current financial health, the recent performance snapshot.
Yeah.
Now let's zoom out a bit. What about Apple's long-term game, its competitive strength? What do the sources say about that famous economic moat?
Yes, the moat. The sources describe Apple's moat as wide, which in, investment terms is basically the gold standard. It doesn't get much better than wide. And it mainly comes from that deeply integrated ecosystem we talked about, hardware, software, services, all working together seamlessly. iPhone, Mac, App Store, iCloud, Apple Music, Apple TV, plus Outlet, all links together.
That flywheel effect you hear about.
Yeah, precisely. Every piece reinforces the value of the whole thing. This makes it incredibly sticky. The switching costs for users, the hassle and expense of leaving the ecosystem are really high. And it's not just about being locked in. People seem to genuinely like it. Customer satisfaction and loyalty numbers are consistently reported at 97-98% for key products. That's huge.
Yeah, that loyalty is powerful.
It really is. It gives Apple unique pricing power, resilience when times get tough, and importantly, that installed base of devices just keeps growing across all categories, making the moat even wider over time.
That ecosystem is definitely a fortress.
Yeah.
Now let's shift to the future, because Apple's making this massive bet on artificial intelligence, AI. What are they actually pouring money into here, and what does it signal strategically? I'm really curious how they plan to weave this in.
It's a central focus now, absolutely. A major strategic pivot, you could say. The sources are explicit. Apple is significantly ramping up AI investments. CEO Tim Cook was even quoted saying he's ready to open its wallet in the AI race. That's kind of a shift from their usual fiscal caution, maybe?
Open its wallet sounds serious, especially for Apple. What kind of numbers are we talking?
Huge numbers. A commitment of $500 billion over the next 4 years, specifically for U.S. investments. That covers advanced manufacturing, silicon engineering, and, crucially, AI development. And it's not just talk. You see it in action. The recent WWDC 25 event highlighted Apple Intelligence features. They're clearly working on a much more personalized, capable Siri.
So, what's different about Apple's approach to AI compared to, say, Google or Microsoft?
Well, a key differentiator seems to be the focus on on-device AI, integrated right into the hardware and software while heavily emphasizing user privacy. That's kind of Apple's classic playbook, right? Leveraging their control over the whole stack. It's less about just massive cloud-based models, though they'll use those too, and more about making your iPhone, your Mac, personally intelligent in a way that respects your data. That's the pitch, anyway. It's about making every device smarter, more proactive, more you.
It's a massive commitment, $500 billion. How does that kind of spending affect their capital expenditures, their CapEx?
Yeah, CapEx is definitely expected to grow substantially to support all this, though the sources suggest maybe not exponentially. It includes big investments in their own private cloud compute infrastructure and building out first-party data centers. It seems like a hybrid strategy, using some third-party cloud, but also investing heavily in their own capabilities to power this AI vision, especially the on-device parts.
Okay, it's crucial, though, for listeners to get the full picture. Ambition is great, but what about the risks? What are the major red flags or, potential tripwires highlighted in the sources that Apple needs to navigate?
Absolutely. There are definitely some significant risks flagged. First one, increasing tariff costs. That's a real headwind. The report projects a $1.1 billion hit to gross margin just from tariffs in the upcoming Q4.
$1.1 billion. That's up from Q3, right?
Yeah, up from $800 million in Q3. So it's growing. Now, Apple's actively trying to mitigate this. They're optimizing the supply chain, making those big U.S. investments we talked about, building chips in Arizona with TSMC, supporting rare earth materials sourcing in the U.S., even a manufacturing academy in Detroit. And the sources also note that shift in where products are made for the U.S. market. Apparently, most iPhones sold in the U.S. now come from India, and Macs, iPads, watches largely from Vietnam, though products for other countries still largely come from China. It's complex.
Okay, tariffs are one thing. What else?
Second big area is regulatory scrutiny and potential legal risks. That wide economic moat we praised. Well, regulators globally are taking a very close look at things like Apple's App Store policies, its market power. There's specific uncertainty mentioned around potential court rulings that could mess with that long-standing revenue-sharing deal Apple has with Google for search placement. That could be a big deal financially.
And Apple's response.
They decline to speculate on outcomes, which is pretty standard, but it's definitely a risk hanging out there. A bad ruling could hit the bottom line and maybe disrupt a key partnership. Third, there's intensifying competition, especially in AI, and the potential for ecosystem disruption. Some worry that new AI platforms, maybe voice-first or agent-based, could make the iPhone less central as the main gateway to information or services.
Like AI becomes the new interface, potentially bypassing Apple's control.
That's the concern some have, yeah. Will Apple still be the gatekeeper? Apple's view, according to the sources, is that their products remain very valuable, and these new AI things are seen as complementary, not replacements. They're betting their integrated experience wins out. And finally, just circling back to the stock itself, there are valuation concerns. As we mentioned, the report noted the share price at the time, $207.84 in that instance, was slightly above their fair value estimate. $204.32. Meaning, for investors, a lot of Apple's strengths and future plans might already be baked into the current price. That could limit the potential for, significant quick gains or near-term upside. The easy money might have already been made, so to speak.
And just to touch on legal matters again, besides the regulatory stuff, is there any other recent legal news mentioned?
Yes, the sources do highlight 2 class action lawsuits filed just in early August 2025. They were brought by 2 different law firms, Likemar Fonte and Ald LLP and Pomerantz LLP. These suits are against Apple and some officers alleging potential violations of federal securities laws. This relates to investors who bought Apple stock between June 10th, 2024 and June 9th, 2025.
Okay.
And just to be clear for you listening, we're just presenting this information impartially as it appeared in the sources to give you that complete picture.
Understood. Wow, what a truly fascinating deep dive into Apple today. We've really unpacked a lot, this picture of huge financial strength, that incredibly powerful ecosystem, these really ambitious AI plans. But yeah, also navigating some pretty significant headwinds. Tariffs, competition, those legal and regulatory clouds gathering. It really does feel like a company at a pivotal moment, like we said at the start.
It absolutely does. And maybe a final thought, sort of provocative for you to mull over. Apple's greatest asset is probably that deep user loyalty, that sticky ecosystem, right? So the big question is, will these massive strategic bets on AI successfully leverage that loyalty? Will they redefine personal tech again and push Apple even higher? Or will the competition, the regulations, the sheer scale of the challenges prove too much, even for Apple's mighty defenses? It's definitely a high-stakes game unfolding, a really compelling journey to watch.
Couldn't agree more. Well, thank you for joining us on this deep dive into Apple. We really hope this discussion gave you a clearer, maybe more nuanced understanding of Apple's current position, its performance, and yeah, its complex future. And hey, if you found this deep dive valuable, if you want to stay informed on other critical topics like this, please do remember to subscribe to our channel and hit that notification bell. It honestly really helps us keep bringing you these in-depth analyses. We try to tailor them to help you understand what's truly important, cut through all the noise out there.
And we always appreciate you sharing your sources with us for these deep dives. It makes this possible. So until next time, keep digging for those insights.